So, guys, welcome back to Trade Pro FX, the most honest and genuine trading channel in the YouTube space. So, today I'm going to teach you about the accumulators trade type in Deriv. So, for those of you that have been watching the channel, we've taught you some other techniques, and today we're going to delve into the accumulators. Now, it's essential for you to understand what the accumulators is, and it's essentially a trade type that allows you to express a view on the range of price movement so that you can be able to make exponential profits, exponential money, and basically make a good earning from the equity that you had placed. So once you get to this page right here, if you're a beginner, the trade types are here. As you can see, we have the accumulators, the highs and the higher, lower, the even odds, the over and under, and the other typical ones that most of us already have come to know. So the accumulators type, as I've mentioned, allows you to express a view on the range of price movement. So once you look at this chart, the first thing you can see is that there's an upper boundary and a lower boundary. This is the range that we're talking about. As you can see where my cursor is, this top boundary is the upper boundary and the lower one is the lower boundary. That is the range within which you're going to be trading. So if you're able to predict that price will remain within that range for a defined amount of time, that is how you're going to make money. Is that clear? Now, it's essential for us to understand how this works and what are the most important things to, first of all, pay attention to before we even make a trade so that we don't end up losing all the money that we've put up in our account. So if you follow my cursor, you can see there's one thing here that is called the growth rate. The growth rate is in percentage, and that one determines how fast your account will grow. If you can see, we have a 1% growth rate all the way to 5%, which is the maximum. Also, it's essential to understand that there's also a limit on the amount that you can trade, the amount of stake that you can put up. I know some of you are wondering, how does the growth rate affect how your account is going to grow? So if you have, I need you to listen closely. This is where I need you to listen closely. If you have $100 and you put a growth rate of 5, that means after one tick, it will have grown by $5 because $5 is 5% of 100. Now, on the second tick, it will take the equity that you put up first, which was 100, and the one that you've already won as profit, which is a $5. Now it will take $105, and on the second tick, it will calculate 5% of 105, and that's why it's called exponential growth. That's why I said it allows you to grow exponentially. That's the advantage. One of the main advantages of the accumulators is that one, that it allows you to grow your profits exponentially. And so I hope if you have a sane mind and you understand what I'm saying. If you do not understand what I've just said, the exponential growth, you can comment. I'm going to clarify that one. I'm going to do a whole video with the mathematics on a paper so that you can understand properly. But I hope you've understood that one. So that's how the growth rate affects. The other thing is the growth rate is fixed. It's fixed. You cannot be able to manipulate the growth rate past 5% or 20%. I know you want to grow your account fast, but if you put a lower growth rate, like 1%, then the amount of ticks are not as random. You understand? And they can go on for longer. Therefore, the chances of the ticks going to maybe 5 and starting again are low. You understand? So if you follow my cursor, I want to show you if you look at 1%, now we are on 1% growth rate. If you look below here, you can see that we have around 240 something ticks. If you look at the history here, this is the history of the ticks, previous ticks. You can see almost all of them were above 100. Almost all of them. This is what I mean. It's not as random, and the ticks are much more likely to go for longer before the price moves out of the range, before the price breaches this range that we are setting, that is set and fixed. So if you go to 5%, growth rate. I just want you to see the contrast and compare. As you can see from the current number of ticks, which is right here, and the history, you can see that very few or even above 10. And that's what I mean. If the growth rate is 1, then the ticks are much more likely to go for longer, and therefore you're much more likely to make money. But the problem is it's 1%. 1% per tick. You cannot compare that one to 5%. And if it's 5%, it's much more likely to go to breach the range in fewer ticks, and therefore you're more likely to make loss. But the good thing is that it's 5%, and you're much more likely to make higher percentages on each trade. So let's do an example. We're going to use a demo account, but understand that it's the same with a real account. So for the purposes of learning, we are going to use the demo account. So right now we have 10,000. That's not realistic for most of us that are watching. If you're watching here because you want to improve your financial situation. So therefore, I'm sure you don't have as much money as and for the ones that have much as much money as we have on the demo account, even better, because you are much more likely to make more money. But so let's try and decrease the amount on the USD to match what most of us might have. So sorry, we're going to use the even odd trade type. So 99 USD. So good. So now our account now has $100. That's fine. That's what we wanted. Get back to accumulators. Now with 100 USD, here it's where it gets interesting, because there's some of us who are much more risk averse, and there are some of us who like to take risks. That's all dependent on how much you're willing to lose. Understand that if you put the stake as $100, you might lose all of it within one tick. So for example, let's say 100 USD. For the first trade, we are going to go with we're going to use the whole equity as the stake, so that we can have a greater chance of improving and increasing our capital. So I'm going to wait for it to get out of the breach, to breach the range. As you can see, it has already breached the range. I'm going to reduce the growth rate to about 3%, so that we have a more stable number of stats on the ticks that have gone. And let's see. Now, it's also essential for you to have a number in mind which you would like to win. For me, I would like to get to $10.15. That's okay. I get out of the trade. Now we have 115. Now that's what I'm saying. If you once you're ready to get into the market, you're going to press buy, and then you're going to wait for it to get to where your target amount is, the amount that you initially wanted to get to, the target amount or the target profit, so that you can get out of the market. So for me, I'm going to wait for it to get out of the market. Let's see. And understand that trading is risk. I'm going to wait for it to get to about $10, 15, 20, 20, then I get out of the market. So now we have $142, as you can see from the USD account. So basically, it's quick money in very few moves. Do you understand? Quick money in very few moves. And one of the best ways is to wait for it to get out of the range, to breach that range, as it has done. As you can see, it has started again. Once it breaches the range, get into the market, and if it gets to your desired amount, get out of the trade. There's no need to get greedy. There's no need. Patience is key, is very important. And as you can see, I'm risking $100. The initial $100 that I had is what I'm risking. Now, if you want to be more risky, you can, as the equity increases, as the capital increases, you can continue increasing the stake. Now you have 142. You can come and increase the stake to 142. Basically, what you're doing is you're risking the whole account, 152 USD. And we're going to wait and see whether it gives us an opportunity to get into the market and understand that it's not more. There's a little bit of strategy involved, but it's also more of reading the history and the data, the previous data. $20, get out of the market. So as you can see, it has breached and started again. Therefore, it's essential for you to understand that it's about reading the stats. That's why you're given a history here, so that you can have an average of the amount of moves that it takes for it to breach the range, a given range. As you can see here, we have an average of around 5 to 7 here, and even higher, maybe even 10 ticks on average. So that's why I'm saying once you get into the trade, for example, here we can get into the market and let's see, it has gotten out by, hopefully, once you get $20, you're going to get out of the market. 17, 20, get out of the market. So that's what I'm saying. The aim is to grow your account slowly. We started with around 100. Now we are almost doubling the account. And understand that if this is a real account, it's going to affect the same way, the exact same way. So analyze the stats here. Have an average. Get out of the market once your desired target amount is reached. If you're aiming to get to $10, once you get to $10, get out of the market. If you're aiming for $20, if you get $20, get out of the market. Do not be greedy, as that is how you're going to blow your account. Now, there comes a very high risk if you trade with the whole equity. Our whole equity, our capital, is $197.73. If you're going to use the whole of it as stake, understand that you might make more profit, but you stand to lose the whole account in just one single tick. And that's essentially what I'm trying to tell you. So I wanted our account to get to $10, and we're going to get out of the market. $18, we get out of the market, we have 216. So we've doubled our account in a matter of seconds. Where else are you going to get double the amount that you've put in? It's like printing money out of thin air. So if you're not in our school, if you're not in the group, right now we have a private community. You can DM or you can click trade in the comment section. If you type trade in the comment section, I'm going to add you to our community of private traders, a group of about 50 people who share all these tactics. You're going to be rich within months, within a few weeks. So ensure that you comment trade in the comment section so that we can add you to the group. Also, if you have any questions about the video, comment and ask all those questions below. I'm going to answer all of them personally. Now, since you've understood how to make money, for the new traders, once you make money, you need to invest that money. And one of the ways to invest that money is to invest it into real estate. So, real estate is one of the main ways to create legacies that go over entire decades, that your children can enjoy, to make passive income. Because if you don't want to work in the end, then you have to invest in various assets, one of them being real estate. So one of the companies that you can invest into is Harry Homes. Harry Homes is a developer company. They sell property, they sell all those things. It's a real estate developer company. Now, if you have enough money, for those who have been trading with us for a while, have already been making profits with us for a while, you know how to invest. And some of you do not invest in real estate. Some of you have not invested in real estate, and some of you have been asking where you can invest your money into. Harry Homes is one of the ways to invest, one of the best companies. This is the way to go. If you have some money that you want to invest into real estate, I would advise strongly that you go and invest in your property. One of the properties that Harry Homes is developing, you can see they have properties in Kiambu, they have properties in Lemuru. We have properties everywhere. You understand? We have properties in Ngong. This was by the way, these are one of the properties that are recently going to start earning. Therefore, if you're wondering where you can buy property, go and invest here. Or you can comment real estate in the comment section, and I'm going to help you. I'm going to contact you. Then you can talk candor. We can talk aside in the WhatsApp group privately, and I'm going to show you, to mentor you personally, how you're going to invest in one of the units. If you're able to get one of the units in Herringong Heights, you're going to start earning in February. You're going to be earning rent. So it's very, very wise of you to make such decisions. And this is why we are here to help you not only make money, but to know where to invest it. And one of the best ways to make wealth is real estate. So check out Harry Homes. I have properties also in Kitusuru. Kitusuru, by the way, we also have properties that are available right now. 3 bedrooms available right now, which you can start earning immediately. If you buy those properties, you can start earning rent right now. You understand? So be sure to check that one out. For the ones who've been trading with us, you know Harry Homes. We have new properties. Comment, DM the ones who have our contacts, and we are going to advise you on the way forward. So, until next time, my guys, I'm going to go take a nap, and I'm going to talk with you next time. Happy trading, everyone. See you on the next video.